Good morning, ladies and gentlemen. We are going to start our webinar for this session that we have prepared to all of you. On behalf of GL Del Rio, we would like to give you a warm welcome to this session that we have prepared for you. I would like to explain in general terms what will be the dynamic that we will be following for this session. Pretty much we will be explaining all the changes and all the new regulations for the electronic invoices that will take place in a couple of months. During this presentation, it will be possible for you to make questions. You have on your right side of your screen a panel where you will be able to make questions. Feel free to do so. However, due to the short time that we will have, we will not be able to answer them along the presentation. At the end of the presentation, we will have a Q&A session in which we will try to cover as many questions as we can. And in case we are not able to answer your specific questions in this section, please feel comfortable that we will answer them independently, separately by email to you, so you have all the questions answered. So in the first place, I'd like to introduce myself. My name is Leonardo Gomez. Here, I'm tax associate in the office of GL Del Rio in Monterrey. I have with me as well, and I would like to introduce Cynthia.
Hello, ladies and gentlemen. My name is Cynthia Yanez, and I'll be here with you to review this new regulations that we have in place very soon, and I'm glad that you can join us. So we're going to start with a presentation. First of all, Leo is going to give us an introduction.
Sure. As a general, in general terms, what will be the agenda that we will be reviewing? We will be reviewing the changes for 2017 that will become mandatory. You will see as of December 1st for this year. There were these new publications by the government related to the electronic invoices that becomes mandatory for the taxpayers. So that will be part of what we will be reviewing during our presentation, as well as a new electronic invoice. CFDI, for those who do not know, just for your information, is the abbreviation of electronic invoice. We will be seeing that terminology during our presentation. So there is this new electronic invoice that will become mandatory, and we will be talking about along with our presentation. So general aspects that are as a background or as a timeline, recent changes. During the past couple of months, the government had been implementing new electronic invoices for taxpayers in Mexico. A couple of months ago, there was this new version of the electronic invoices specifically for payroll. Currently, the version that we are working right now, it's version 1.2 that was published on October 4th and become applicable, become mandatory as of April 1st. However, this is the second version in terms of payroll electronic invoices. There was a prior version which was 1.1 and contained less requirements than this new version. So what we are watching in here is that the government is trying to move forward in terms of electronic invoicing along the road. So they already made changes in the payroll invoices. However, as recently the government issued the new Exhibit 20 that will become mandatory as of December 1st. Exhibit 20, we will be reviewing it later on. It's pretty much the document that contains all the instructions related to the way the electronic invoices needs to be submitted. Currently, we are working, and in the past couple of months, we have been issuing invoices to our clients in the version 3.2 of electronic invoices, which requested certain fields, certain information that we need to incorporate when we are going to issue an invoice to our clients. Well, now with this new publication of Exhibit 20, the rules changes. The government is implementing new changes, so that is something that we will need to catch up as well. There is this new complement of receiving payments that as well becomes mandatory, and there is this new procedure for cancellation of your invoices. that will become mandatory as of January 1st. This slide that you're watching in here pretty much just only shows the legal support that I just mentioned in the prior slide, which mentions that the new Exhibit 20 becomes mandatory as of July 1st. However, in the fourth article, transitory article of the Second Amendment resolution to the miscellaneous tax resolution, there is this facility or provision that mentions and gives you an extension for you to become mandatory as of December 1st, the issue of these new invoices with version 3.3. How, as well, in this same provision, there is an extension as well to issue the complement of payments that we will be talking a little bit on. It will have an extension, and this is the legal support. In the following slide, we are watching just pretty much what I just explained. What is Exhibit 20? In general terms, for those who might not be familiar with this expression, Exhibit 20 is a publication that the government made, which pretty much contains all the programming code that contains all the specification and instructions of how your IT department will need to set up for you to create your electronic invoices. So in the past there was other version, but now with these new changes, modifications will need to be made to the template of electronic invoices. Another element or another definition that we will be reviewing during our presentation that you will find out, it's the word complement. The word complement, it's nothing else but a specific field that will become available in your electronic invoices when you carried out specific transactions for specific sectors. Nowadays, in the currently, there are 25 complements available that the government has issued so far. In this slide, you can watch them all, in which most of the common ones are, for example, in the first column, at the bottom, you can find the payroll receipt. That payroll receipt complement becomes an additional field in the invoice that is created to fill in a specific information of that transaction. In this case, for payroll receipts, they request you to fill in information such as the social security number of your employee, such as the taxable revenues that you're paying to your employee, exempt revenues, the type of revenue that you're paying to your employee in the payroll, like salary, vacations, etc. So that specific information related to payroll becomes a complement. Nowadays, the government, in the last one, you have the receiving payments complement. That is the new one that the government is implementing right now. In the following slide, we just want to emphasize that complements becomes mandatory and are mandatory to be used 30 days after the publication of them before the tax authorities, unless there is a special disposition that allows you not to use them, which is the case right now for the complement of payments that, as we already mentioned, has an extension and becomes applicable or mandatory as of December 1st. Currently, there are 5 types of invoices now with these changes, with these new changes. In the past, we only used to have 3 different types of invoices, which was the one for incomes, we already know it. The one for payroll as well, there was this electronic invoice in place. We also have the invoice of expense, and there are these 2 new invoices that becomes available or becomes mandatory due to this new modification. Those are the transfer invoice, which in most of the cases will not be applicable, but for very specific cases, for instance, the freights. And there is this another invoice that becomes for payment. That is the one that we will be explaining during our presentation. So far, I have been up to speed with all the changes that the government had made, but even though we have been up to speed, now it seems to be the case that we need to learn again what the government wants to teach us.
Exactly. So we are going to break down Exhibit 20 for you. We're going to notice the main differences so you can know what to look for in this new version of CFDIs. So now on this screen, we can see that Exhibit 20, which, as Leonardo mentioned, is a document that contains the programming requirements for the software. The prior Exhibit 20 only talks about CFDIs, which is Internet Digital Tax Invoice on the left. But now this new Exhibit 20 on the version 3.2 is detailing requirements for different types of invoices, such as the regular invoice that we know, the regular CFDI. Then they're describing CFDI for withholdings and information for payments abroad. The third one for CFDI for payroll, which these two we are not going to discuss during this section, and the latest addition, which is the CFDI for payments received. So basically, we are going to be talking about item 1 and 4 on the right, which is the regular and new CFDI plus the complement that it's going to be needed for payments received. Now, this new version of Schedule 20 includes validation rules. For example, in the past, you could have addition errors. This time around, they're having a validation that will sum all the amounts automatically, so to avoid mistakes. They're breaking down classifications. We have 17 classifications. They're going to request certain type of a structure on 16 fields. For example, we are going to see that the tax address is no longer required, but they do request the zip code in a specific structure. So that's what they want to see now. Therefore, we have less fields. The tax authorities are going to validate the tax ID number for the recipient of the tax ID to make sure that they are existent and valid tax ID numbers. Also, non-negative numbers may be used anymore. So in later on, we're going to talk about how we are going to handle credit notes, because we used to do it with negative numbers, but not anymore. And they introduced a procedure for confirmation for invoices with large amounts. They previously established a limit of 100 million pesos. So if you wanted to invoice an amount higher than that, you needed to require tax authorities' approval. But they actually have released this limit, so the procedure for confirmation is not required at this moment, but it's a possibility that the authorities could get it back later on. Another difference is that discount for each item listed on a CFDI needs to be identified to a specific type of item. We're going to talk about product and service number a little bit later on. We might need to use an internal identifier that may be created for corresponding product or service. This is according to specific catalog that we're going to explain. And they put a limitation of space in the name and as well as in payment terms. Now, this is something that we already know. We have some fields that are required, such as the tax ID, such as the zip code, and there are other fields that are optional. This means that are not really necessary, but they are there in case you wanna fill them out, such as the description of the product or the service. And there are some others that are conditional. So this is something that, for example, if in a required field such as exchange rate, the currency is something different than Mexican pesos, then the exchange rate will become a required field. So this is something that, due to a prior information, something else becomes mandatory. Now, something that triggers another whole subject for review, which Leonardo is going to talk about later on, is the payment method. This we have talked about a little bit in the past because this is not very new. They have been processing this type of CFDI. Now, the tax authority wants us to establish if the payment is made in one installment or in one exhibition. In that case, we are going to identify with the letters PUE for the words in Spanish, payment in one installment. And if it's a payment in installments or there is a payment that is deferred, we are going to use PPD also for its translation to the Spanish. So basically, we are going to use PUE when the payments are done in one installment and the payment is made prior the issuance of the invoice. And for every other occasion that the payment is made, as it could be tomorrow or in a week or in 2 months, that is considered as a payment in installments or deferred. In that case, we're going to use PPD, which is payment in installments, and will trigger the obligation of issuing a CFDI with the complement of payments received. Now, another item that is requested on this new CFDI is the currency, which it's going to be up to 2 decimal points. We have a catalog that also establishes all the currencies available. So just need to fill that information. Also, we need to reflect exchange rate for the transaction date and reflect the number of Mexican pesos according to the currency that is being used, as well as the method of payment that we just reviewed. We're going to have payments in one exhibition or installment, or payments that are in several installments or that are deferred. Also, considering these payment methods, then according to that, we are going to have to establish payment terms. So the code for payment terms, it says, if the consideration is paid prior the issuing of the CFDI, the taxpayers shall enter the code that corresponds to the method of payments that was initially paid. It can be cash, wired, or credit card. Then also, if more than one method of payment is applied to specific transactions, the taxpayers can decide to use the method by which the greatest amount is paid. If, in the other hand, if the consideration is paid on a later date, we're going to use a specific term that it's the code 99, and this is used for situations that the payment form it's going to be decided later on. So if for the cases that the transaction is not paid in one installment, then we are going to have to use the complement for receiving payments. This is according to a miscellaneous regulation. it says when you use the code 99 to be defined, this means that the price has not been paid, then we are obligated to use a complement for receiving payments. Now, another changes of the version 3.3 is that we are required to use the curb code when the issuer is an individual tax person, and the tax regime is required when the issuer has more than one tax regime. Also, in regards the recipient, well, we also need to include the curb code when it says individual taxpayer, and we also need to indicate the tax residence of the recipients. This is for every foreign person or entity, as well as the tax ID. Nowadays, it is mandatory to include the tax ID of whichever foreign resident.
Thank you, Cynthia. Some of the other changes, and actually this is pretty much the major change that it was published in these new Exhibit 20 and these new regulations, is the fact that nowadays, or currently, if you want to bill something to your client, it's just a matter of, in the description of it, of the invoice, you type in whatever is your product or whatever is the service that you're rendering. As of right now, or as of December 1st, when this becomes mandatory, the major change becomes that the government now issues a catalog of product and services for you to pick out from that catalog the product that you're going to bill to your client. That catalog contains around 52,000 products that it's a standard catalog published as well by international organization for standardization. So it's the ISO, an ISO catalog that contains pretty much like general products and services detailing it that are used worldwide. Of course, the government knows that it might not be possible for you to fit in exactly the item that you want to bill, but the catalog is very big, very extent. So it is very important, and one of the main right now is to make sure to start mapping. It's the division, a general division. It will be composed by the two first numbers. Then we have the group that is composed of the following two numbers. Then we have the class, which is as well integrated by the following two numbers, and the product subsequently. So in an example that you want to build an impact hammer that you can watch here in the slide, then you will need to pick, or you will need to say that the division is the first two numbers, which is 41. Then the group is the other two numbers, which are 11. Then the class is the other two numbers, 64, and the product is 01. So in case your product is not found in the list, the government mentions that you can use the number 01010101. And in order for them to try to make the look for your products easily, they had released this product or this tool that they created that you can find in that link, which helps you to look for your product by typing just like keywords like the type of product, etc. So in the assumption, even though that you might not find your product exactly to the catalogs that they already provided, then the same provisions in the law mentions that in those cases you may select the code that, even though does not describe your product or service exactly, matches the best. It's important to mention in here, at the third level. So we were mentioning that there were 4 levels. The first one is division, then group, then class, then product. So even though you might not find your product in the catalog, you are allowed to use the one that fits you better until the level of class. So you will need to type in the first 6 digits, and then the last 2 digits which are related to the product are allowed you to use 00. That is one of the most important changes in the new electronic invoices that will need to become mandatory. Another of the changes as well is the part of the discounts. In case you want to give or grant a discount to a specific product when you are billing or when you are invoicing to your client, it will be necessary or mandatory for you now on to detail the discount by item. If you're billing them to your client 10 items and you want to grant a discount only for 6 items, you will need to detail in your electronic invoice 6 lines for each discount of each of the 6 products that you want to grant a discount. Another of the changes as well is for those taxpayers who currently sell kits of products. What the government means in here is not precisely like a car. You can say at a certain point that a car might fit into a kit, because at the end of the day, you're selling a wheel, you're selling the chassis, you're selling the chairs, etc. Well, it does not precisely fit into that category. What means here when they refer to kit are referring to those specific parts that you have to assemble separately to create one kit. For example, a toolkit. You may go to Home Depot and you find a kit which is composed by a hammer, a screwdriver, etc. So it's a detail of articles. So that's what they refer by kit. When you're billing a kit to your client, besides the fact that you bill a kit, you will need to detail all the items that cover or comprehends the kit. Nowadays, as we have been mentioning, there are 17 catalogs that you can find in this slide, which in general terms mentions what we all have already been explaining. Nowadays, when you want to bill a product, you will need to pick from one of these 17 catalogs. There is another catalog for currency, there is another catalog for payment of method, there is another catalog for terms of payment. In the following slide, you can find that there are some catalog for countries, for tax rates, for types of their receipts, etc. So this is one of the changes as well. The fact that nowadays it might not be very common that you type in information, because everything will be set up in catalogs and you will need to pick from there whatever the category you fit in.
Thank you. And those catalogs, as mentioned before, are going to serve as a validation that you are including correct information into the CFDIs. Also, we previously mentioned that we're not to be able to use negative numbers anymore. So how are we going to issue a credit note? How are we going to issue for a return or a discount, etc.? Okay, the authority is now introducing this new type of documents, which is an expense CFDI, which is basically going to support returns, discounts, bonuses, and it can also be used to correct or subtract from an income CFDIs. So whenever we want to make this type of transactions, we are going to have to use an expense CFDI. And now, what are the general terms of these expense CFDIs? Okay, of course, since it's similar to a regular CFDI, so it will have a total field, and in this case, we have to include the amount that we want to discount per each type of document that we have to apply a discount. Then there's going to be a link on the note to include all the related documents. For example, as Leonardo mentioned before, if you want to apply a discount, you have to specify or link which previous tax invoice you are applying this discount. This means we're going to have to make a reference to the revenue CFDIs. And we also have to enter the payment terms, and in this case we have two options. Option A is to use the payment term according to the income CFDI that has the greater value. Or let's say that you want to apply a discount to multiple CFDIs with the same value, then it is up to your decision to use any type of the terms in one of these CFDIs. Then also option B is if the term of payment, you can use the term that it's applied to the discount or return of credit, etc. So here I want to make a little example of how it's going to look this credit note. For example, we have issued these 1, 2, 3 revenue invoices, one for $100, for $150, and for $200. So let's imagine that we want to discount 100% of each one of them. Then we have to include the CFDI for each prior document so we can reflect the discount. So in the cases when we want to cancel the total of a CFDI, we are available, and this is sort of like a benefit, that you can only make reference to the CFDI of the number 1, of the number 2, and of the number 3 to discount the total of each. So this is just to give you an example. If it's the case that we want to make partial discounts of multiple CFDIs, we are going to have to issue CFDI per the prior revenue CFDI. For example, in this case, I already issue a receipt type I for income of $200, but I only want to credit $50, then I'm going to make a second receipt, which is going to be type E for expenses, to make reference to this prior revenue receipt and discount of $50 from the $200 that I already issued. So this means that if I want to discount partially, then I'm going to have to make multiple CFDIs to recognize this expense. Now, another new addition to this methodology for CFDIs is that the authority is introducing a CFDI for down payments. And here it's almost like if we have to rethink what is a down payment. So what the authority wants us to understand that it really is a down payment or more like a payment in advance is when the good or service to be acquired or the price is unknown or has not been determined. So if we do not know which service or product it's going to be acquired, or if we do not know the price, then we are up to a payment in advance. And then the other situation is that when the good or service and as well as the price is unknown, then we have to treat this payment as a payment in advance or down payment. So no matter what, we have to look into these definitions that the authority has created in order to identify if we are going to have to prepare this new procedure. So we are going to have two options in order to to issue the CFDI for down payment. And the first option, option A, is a three-step scenario. So I'm going to explain the three CFDIs that we have to issue whenever we receive a down payment for a later product or service that it's going to be rendered. For example, the first CFDI, it's going to be an income CFDI, and in method of payment, we have to establish that is payment in one exhibition with the letters PUE. And in code for product or service, Leonardo previously talked about the 52,000 codes that have been introduced for products or services. Then we are going to have to use 84.11.15.06. This specific code is the one established for payments in advance. And also on the description, we have to enter down payment for good or service. So this is the one CFDI that we have to issue whenever we receive money that we have not identified for which product or for which service it's going to be made on behalf. Then the second step is when we finally make the sale for such product for which we receive the down payment. We are going to have to make a second income CFDI, and in this one, we are going to include something that's called related CFDI, the relation type, and in here we are going to enter the code 07. This code 07 is to recognize that the company is applying a previous down payment that was received, and we have to include the 36-digit tax number of the invoice for the CFDI. So this is a step 2. We're issuing for the total sale and recognizing that we previously had a down payment. Then the third step is to cancel the first income CFDI that was made when we received the down payment. So this is to cancel the previous CFDI, and in relation type we are also going to include 07 to recognize that we're canceling or leaving without tax effects the previous CFDI. Now the second option, it's a little bit more simpler than that. It's only a two-step situation in which we have to make one CFDI for the total of the transaction, same as in option 1, and then we are going to enter a second CFDI, and we're going to recognize the application of a down payment. But we have to recognize the 36 digits tax number on which we received the down payment. So just as a reference, down payments will be accrued as taxable income on our monthly tax returns in the period on which we received the corresponding down payment. However, when we finally make the total sale for which the down payment was made, we have the option, and this is funny how the authorities mention it, it's an option to only consider as taxable the difference between the total sale and the down payment that has been previously accrued for tax purposes.
Thank you, Cynthia, for explaining this part of the down payments. Now, moving on to another new electronic invoices that the government is issuing. We have this complement when receiving payments. Currently, when you bill to your clients and you collect that money from them later on during the month or during the following days, it was just a matter of making sure that you correctly register it in your accounting. But as of December 1st, once the extension is concluded, it will be mandatory that for each payment that we receive or for each collection that we receive from our customers, we will need to issue another additional invoices. So nowadays we bill or we have one invoice for the revenue or for the transaction per se, but you will need to issue another one as well. When those cases, specifically when you have payments in installments, according to Article 29 and 29A of the Federal Tax Code. So this is, which is pretty much the case of most of the taxpayers, except maybe for those departmental stores like, I don't know, like Sears, JCPenney, or whatever store in which you go there, you pay it in cash, and you take your merchandise, and that's it. Usually, they do not sell like in installments. It's not like the common space for that. So it's usually the fact that for those taxpayers who bills and collects, even though if it is tomorrow, then you will now be obligated to issue this new electronic. So when are you going to bill or issue those invoices when you receive collections from your customers? Well, there is this rule 27135 of the miscellaneous tax resolution that mentions that you will have 10 natural days after the month end for you to make those invoices. So it's important to mention here that these are calendar days, not business days. So you have until day 10 of the following month, every month, to bill those invoices. Part as well of what you will be mentioning or what you will be detailing in these invoices, it mentions that you will have as an A point or a first point a CFDI for the total of the transaction. And later on, when you receive the payments, you will need to issue this complement of receiving payment, which will not put, you will not put any value as a total because of the fact that, again, this is not precisely an invoice. It's a complement to the main invoice. For that reason, they do not want you to put in total nothing but zero balance. As well, in the part of payment of method and payment term, they do not want you to put anything in particular to there, because since that is only an additional electronic invoice related to the first transaction, then it will be not mandatory for you to put that information. What is the information that will contain the payment complement? In general terms, you can find here this is a summary of all the requirements that you will need to contain in the issuing of your invoices. The most relevant becomes the subtotal. Like I mentioned, it was going to be zero balance. The currency you will put XXX value, and the total you will put zero value. The receipt type, you will put the code P as payment. In case of the issuer, you will put information such as a tax identification number, as well as the name of the taxpayer who is issuing it, as well as the tax regime in which the taxpayer pays its taxes, in case the company has different tax regimes. In the terms of the information that the recipient will need to put the information, you will put as well the tax identification number, as well as the name, the tax residence, and the tax ID. This as well shows a little bit of the information that we have been mentioning. It's important to mention in here, as mentioned bullet number 2, that it will not be necessary for you to type in like withholdings or taxes information, as we will see in a couple of minutes in some of the examples that I have here. Yeah, you will have a place as well to put some, there is a field called addenda. That addenda pretty much allows you to put whatever type of description or additional information that you want to put in your invoice, well, you will still have the addenda in there. Some of the, as well, of the information that you will need to put in the complements of payments whenever you receive a collection, you will need to put the payment date, the payment terms, the currency, the exchange rate, the source bank name, the source account, the pay account, the payment chain, the payment seal, and some other information that you can find whenever you are doing specifically wire transfers. For example, here in Mexico, it's very common that most of transactions, I can say like 98% of the transactions are handled by wire transfer. So the fact that you have your support wire transfer pretty much will be very important, or will be a key element for you to elaborate these invoices, because it will contain most of the information that you will need to put in the complement of payment. To have a clear perspective, or a better perspective of what we just explained, we have this example number 1, which it mentions that you are billing, or you invoice one transaction for a total of $1,000 plus its corresponding 16% VAT. So you have a total invoice for $1,160. So, and now later on you receive one payment, I don't know, during the following month for the total of your invoice. So you will need to issue another invoice, which will be the complement of payment, and you will reference the electronic invoice number, the 36-digit number of the first invoice that you billed. In that amount, or in that invoice, I'm sorry, you will mention what is the amount, the total amount that you collected, including taxes, everything, the total amount that pretty much you receive in your bank account. So in that amount, or in that electronic invoice, you will need to detail as well important information such as the amount prior balance, which in this case was for the total of the invoice, and then what was the amount paid, which was as well for the total on the invoice. So your remaining balance, or your outstanding balance, is 0 as of that point. That information, you will need to put it in this new complement electronic invoices.
So basically, this new complement is to control cash flow and the outstanding balance of your invoices to your customers. Each time you're going to have to control which is the remaining balance and create another CFDI when another payment is made.
Correct. As we can watch in the following example. This is example number 2. In this example, you bill 2 invoices to your client, one for $1,160 and another one for $11,600. So during the month, you receive 2 payments. You receive a first payment of, you receive a first payment, or the client deposits $1,000. 600 covers the first invoice, and the 400 covers the second invoice. So in your complement of payment, you will need to detail that you did receive 1,000 pesos in this case, and then detail by invoice the prior balance that you have outstanding, the amount that you paid that covers that invoice, and the still outstanding balance. In the first invoice, you have your prior balance for the total of the invoice, then you pay 600, so your standing balance for the first invoice is 560,000 pesos. That is the control that the government wants to see for each of the payments. There is another example that we have. A third example would be what happens if your client pays not only in one install or in 2 payments, but in 3 payments. Then we have example number 3, which you had already issued a first complement for a first payment that you received for $400. I'm sorry, $600. And then in this time, the client pays you only $400. So you still have, at the end of the day, after those two payments, an outstanding balance of $160. So the government wants you to issue another electronic invoice for the history of all the payments, controlling all the accounts receivable and accounts payable.
So if we would like to reduce administrative work, it will be best if we collect in full each one of our clients' invoices. Otherwise, we will have to make an individual CFDI every time we have a payment from a customer.
Correct. So something important to mention that when Cynthia was mentioning that one CFDI for one payment, there is this provision in the tax regulation that mentions that even though you receive 10 deposits along the month, you will have until day 10 of the following month to issue your complement invoices for receipt payments. Well, there is this alternative that allows you to gather all the 10 deposits that you receive from the same client. It's important to mention it's only by individual clients. So you can gather those 10 deposits and issue just one invoice for complement of payments. Instead of issuing 10 invoices per each deposit, you can do it only one by the deposits that you collected from the same client along the month.
Okay, so we are going to move on with the sanctions or the possible penalties that, of course, the authority could apply when they found out that the taxpayer is not complying with the issuance of these CFDIs. It can go as extreme as the expenses cannot be deducted or the VAT cannot be credited for tax purposes due to the fact that by not issuing the CFDI, you avoid complying with regulations of federal tax code, income tax law. So it can go as far as the impossibility to deduct certain type of expense. Also, they have issued a penalty that failure to issue, deliver, or prepare CFDI available to clients or CFDI that do not comply with all the rules or requirements. There can be a penalty from 13,000 pesos up to 77,000 pesos. That will depend on the level of what was incurred. Now, as we mentioned, there's also a cancellation a procedure that we have to make. In the past, taxpayers could cancel a CFDI without giving notice to anyone. Nowadays, when a taxpayer wants to cancel a requirement for which we already have a complement for payment, this means that you already have received in partial or in full part of the payment, then it is not possible to cancel the CFDI that supports the transaction. If that is the case, the company will need to request authorization for the recipient. So if they agree, in that case, it's possible to cancel the requirement. The only situation on which a company can cancel a CFDI is when the tax ID number is incorrect, and of course everyone will be interested in having it corrected, so that is the only case in which it's possible to cancel CFDI as long as another one with a correct tax ID is issued. So the new cancellation procedure is in transactions over 5,000 pesos. Over 5,000 pesos cannot be canceled directly. So the issuer has to send the recipient a cancellation request. And the recipient has 3 days to either accept or deny the cancellation. If there's no response from the recipient, the tax authority will consider that the recipient has accepted the cancellation. And this is going to be done through the tax mailbox, which is something that taxpayers implemented a couple of years ago. So this is how they're going to receive notifications. So it's very important to make sure that you have a current email address in which you can receive notifications from this tax mailbox. And in case you need to correct a complement for the receiving payments, if there are some errors, it can only be canceled if it is replaced with another with correct information.
So just to try to put in an example what Cynthia just mentioned in terms of this cancellation need procedure, we can have we have this first example in which we bill a first initial invoice, and then we want to make a change. There was an error in there, so we will need to replace the electronic invoice, cancel the first one, replace the electronic invoice, and now then issue the other ones for the installments that we receive. Another of the example, there is this scenario in which you issue a first invoice, and then you issue your, we can allocate ourselves in the middle of the presentation. You issue first your original invoice, then you receive a first payment and you elaborate a receipt of payments, and then you elaborate a second one as well. And then you find out that you need to cancel your original invoice. What you will need to happen is that you will need to elaborate a credit memo or expense invoice to cancel the revenue of the first original invoice. And then on the right hand of the presentation, you will need to do now another new invoice, which will replace the original one. And then cancel the 2 installments invoices that you receive and replace them with other 2 installments. So imagine how complex become, you may already seen it, how complex become cancellate invoices in the future. So it will be very important to be very careful with what we are invoicing, because of the fact that if we do not have the very good controls and are not very careful, it ends up becoming a very big administrative burden. Another example that we have as well is, well, pretty much what we have already mentioned. You have your original invoice and then you receive a payment, so you cancel. The original invoice is not canceled, but the first installment that you receive is the one that is incorrect, is the one that you want to change. Okay, you are allowed to cancel it as long as you replace it with a new electronic invoice for payment recipients. And now you just cancel your first installment, you replace with another, and then you can proceed to elaborate the second installment. So that's it. In general terms, that's pretty much what all the changes related to the new regulations. We understand that there is a lot of information, there is a lot of changes, and unfortunately there is not too much time available as of right now. As we mentioned, the obligation to start issuing invoices with all these new regulations for the new version 3.3 will become mandatory as of December 1st. That's the information that we have as of right now. Of course, later on during the road, the government can publish extensions. But so far, as of today, that is the due date that all taxpayers have. as well for the issuing of the complement of payment recipients, meaning that during these couple of months until the November 30th, you are still allowed to receive payments from your clients, from your customers, without issuing this additional invoice.
So Leonardo, as you mentioned, there is a bunch of administrative work that it's coming in front of us, and most of it belongs to the accounting department, because they are the ones that need to issue the multiple new tax IDs. But first of all, we need to review with the IT department or electronic invoicing service providers, because they are the ones that need to make the updates on the system so the accounting team can fully implement these changes.
Right, and just like Cynthia mentions, in general terms, there are two baskets of persons who needs to be focused on here. For those clients who currently bill using the third-party service provider, well, those can the burden is for the service provider. They are the ones who needs to be updated and needs to be working right now with these changes. So it's important that you turn around with them and just ask them what are they doing right now to make sure that they are in compliance as of December 1st. However, there is this another basket for those clients who decided to elaborate or to manufacture their own software, internal software. Those are the ones that it's a good time right now to start working with, like Cynthia mentioned, with the IT department, with your accounting department, to work on these changes to make sure that you're in compliance as of December 1st.
Yes, and actually all the changes can be reviewed on the Annex 20. That is the document that includes all the modifications that are necessary. So this is the presentation. We have been glad to speak with you for this moment, and we're going to proceed with a couple questions and answers that we received through this webinar. The first of all, Leo, I'll read the questions and you can answer them. It says, does the new CFDI allow negative numbers for credit notes, or how are we going to issue credit notes?
Okay, no, in this case, the answer will be no. The new invoices will not allow you to type in negative numbers, as we mentioned. Usually, currently, when you want to grant discounts, those are the cases in which you use negative numbers. So, as we explained, now as of December 1st, when these changes takes on, the way to issue or to contemplate negative numbers will be when you want to bill an invoice for expense.
Okay. Another question, it says, during the presentation you talk about unit of measure. Which unit of measure do I have to include when I issue a complement for payment?
Okay, the unit of measure that you will need to put is the abbreviation. It's called ACT, for instance, in Spanish.
Okay, so no unit of measure for the prior CFDI, but this one that you just mentioned, ACT. Mm-hmm. Okay. Regarding the new catalog for projects, which level of identification is required for products or services?
Okay, yeah, like we explained, there are four main categories that the government put in this catalog of products and services. The first category is the division, and then we have the group, then we have the class, and then we have the product. So it will be mandatory for us as taxpayers to identify until the third level, which is the class. The one for the product, as we mentioned, in case there is no specific product in the catalog, we can type in at the end the last two numbers, 00.
Okay, another question, it says, once it is mandatory, which is the deadline to issue a CFDI for complements of payments?
Okay, it is, as we explained, you have until day 10 of the following month to issue your invoices for receipt of payment.
Okay. Another question. Is it possible to cancel a CFDI if I already have issued a complement for payment?
No, there is no possible unless there is an error in the tax ID of the recipient of the tax of the invoice.
Okay, thank you very much. Okay, and one final question. How much time do we have to accept or deny the cancellation of a CFDI?
Okay, the period it's for 3 days. Once you as a taxpayer want to cancel an invoice, you will the other part will receive a notification in their tax mailbox. So they will have the obligation within 3 days to accept or deny the cancellation that you are requesting. If he do not reply in 3 days, it will consider as he was acknowledging, and therefore it will allow you to do the cancellation.
Okay, so I think that's it. If there are further questions, we would appreciate if you can send it through the format of this webinar. We will be collecting all your questions and answer to you directly. So thank you very much for your time. I know it was a lot of information, but as Leonardo mentioned, it's important to turn to our accounting department and then to our IT department or service provider to make sure that they are up to date with the recent modifications to attachment 20 of electronic invoicing.
Yes, so well, thank you everyone. Like Cynthia mentioned, on behalf of GL Del Rio, we want to take the opportunity to thank you for making time this afternoon, and have a good day, everyone.
Thank you. Have a nice day.